Welcome to TMS Insights. It's early in the August reporting season, but we'll be bringing you today some updates from what went on in the US reporting season, as well as the early stages of what's going on here in Australia as the market hits a record high. So it gives you a bit of an idea how markets are feeling about conditions overall and in particular earnings. So Ben, a record high again. Great news. It's great to see a breadth of buying and encouragement for a lot of companies at the moment.
Yeah, and feels like the market's starting to look in some of those stocks that have underperformed last year. There's been some decent jumps in July and start of August there. Very early days, we've really had three results, which are Credit Corp, which we don't really follow, REA and Pinnacle, which we spoke about last month on the video. But that, all three have been very strong.
Cracking results.
So hopefully, and the US earnings season again was much better than expected.
Well, let's go back because that, and then we'll come into the Aussie stuff. But US reporting, there were reasonable expectations, but overall they've been exceeded.
They have. Some it was still on the tail end, but I think 83% of companies now have beaten expectations, and the average beat's been about 4.5%.
Big number.
Yeah, it is.
Out there,
it is. Yeah,
big number.
So for the ones we follow a bit more closely, Google was the big surprise. They had a much better than expected result. The Google search business has got a lot of question marks about how the transition to AI looks, how they monetize Gemini while that's happening. Does market share get eroded as everyone's using ChatGPT? But it's very cheap. And so the barrier for them to jump over was low, and they delivered a really good result. Similar to Microsoft. And if the commonalities in the Microsoft and the Google results were the data storage businesses, so that's Azure for Microsoft and Google Data in there, both were well ahead of expectations. So that's the all of the AI build out that's occurring and pushing data up into the cloud so that you can analyze it.
4 months ago, people were worried whether we wouldn't hit a soft patch. It's confirmed it's growing and growing and growing.
Completely. And the speed at which it's growing, I mean, so Google's called out on its quarterly, it will spend $70 billion on building out its AI infrastructure this year, in 1 year. So they're big numbers. Amazon came in a bit weaker than expected, so maybe Microsoft and Google have taken a bit of share off AWS, and there's a couple of other little areas, but it's broadly it ran very hard into the result.
Apple, some good and bad news overall in their result.
Yeah,
Berkshire we were talking about too, which came out on the weekend.
Yeah, so Berkshire looks like it's getting into the buy zone. It had a very strange move higher during actually that Liberation Day sell-off, and it's almost completely reversed. There's no reason for it to push up $100 a share, and there hasn't really been a reason it's come back off. The result was a small miss, and the news that got the headlines was that they've written down the valuation of the Kraft Heinz business that they own by $6 billion. $6 billion in the scheme of Berkshire is a rounding error, as weird as that sounds. Berkshire's cash balance at the moment would entitle them to buy 483 of the S&P 500 companies at current market capitalization. So they are as big as the Federal Reserve, almost, you'd say. And I think this has been a stock when it's had periods where it's been out of favor historically, although it's still up 15% for the year. So it still had a good year, but it has come off.
One thing that probably before we get into the Aussie stocks to talk about it is obviously it's hitting record highs here, US. There's a tendency for people to believe that a record high will be followed by a sell-off at some point. Not for everybody, but rolling record highs are probably more normal. And the part that people should be very aware of on the back of the comments we've just made now is this is earnings related. This is the real stuff. The bubble words don't apply when you've got earnings growth like this. The bubble words apply when there's speculation. When we get hard, as we call it, black ink on results and it's growing, and we've got a monetary environment which is friendly, and it is.
Yeah.
That's not the grounds for things to just fall apart and a bubble to burst.
Yep, completely. And look, it's investing is a psychological thing. People want to buy things when they're low and sell them when they're high. Often you should be doing the reverse. Markets are normally over time they're right, and we've got a number of our stocks hitting all-time highs at the moment. If a stock's hitting an all-time high, the probability of it being higher in 12 months is significantly higher than if a stock's hitting a 12-month low. Markets are normally getting this right. So I think the interesting part to me is we're still only a few percent above where we were at the start of this year. So you can look at it and sort of say, oh, wow, what a run we've had.
Pick your period, and find your data that'll follow that. We did have that big sell-off in April.
Yeah, and there's a guy we follow who does some great newsletters on markets, and I saw one great point he made where it's almost unheard of that you get two big sell-offs in 1 year. It's like if you look at history, it's happened like 2 or 3 times in the last century.
Yeah.
So it's the probability is against that, but we'll have little pullbacks along the way.
It'll happen, yeah. But the underlyings are actually very supportive to where we've got to. So that's it.
And just the final thing on that is, stocks will take their own path over the next 2 months, I'd say, because they'll report results and the market could be good, bad, or whatever. If it reports well, they'll be buying in that stock, and the buying won't stop on the first day. It will follow through.
No.
So this is kind of the time when you want to be seeing the result, make a decision based on that.
Based on that, and definitely, again, just on hard facts, because there's a lot of noise around. Trump presidencies create noise.
Yeah.
And noise doesn't help you make decisions. So real facts too. Let's get to the Aussie stuff, because, yes, it's very early in our season, and all of this is in front of us. We've got a couple of very big weeks coming up, but a couple of outstanding results today.
Yeah.
The Pinnacle call and the REA call, which we covered both, were just terrific results. And the market responded. They're both up strongly today.
Yeah, I think you were on REA, I was on Pinnacle. Yeah. There were the earnings calls were at the same time. But, from my point of view with Pinnacle, you could refer back to the video last month if you want to know more about the business. But this company has driven an unbelievably good result, 49% profit growth versus the half previous. And that's really been driven by some of the new fund managers that have come on board and an almost explosive take-up of these funds. So they've got a fund called Lifecycle, which is came out of Royal London in the UK.
The guys left Royal London, which was the dominant player in global equities investing.
That's right, three guys. And
a huge win for Pinnacle to get there.
It was amazing. We couldn't believe they got them as an affiliate. So they own a stake in this business, and then they've sent their sales and distribution team in to try and get money. So Lifecycle a year ago was managing zero. It was managing the 3 founders' money, and that was it. They've got $15 billion into that fund in 1 year. It's extraordinary.
And that's close to, for everybody locally. They know Platinum and they know Magellan. That's in the same sort of ballpark as what they manage.
Yeah.
Well, in 1 year.
Platinum now manage 8.
Yeah.
So it's double what Platinum managed. They've been around for 30 years. Yeah. But we know what's happened there. Yeah. Their farm of their affiliates is now at $180 billion. Ian McCown is focused on a $500 billion target. And the performance fees is the whippy part. Hyperion Global has had a standout year of performance and has again paid Pinnacle a big performance fee, or the investors have. And it seems like a business in great shape. But REA,
cracking result, really good result. And again, what we look at there is, how do they go against expectations? It was a beat against expectations, substantial profit growth. Operating jaws, your costs rising slower than your revenues. And again, we saw the jaws open up both in Australia and globally. Some really interesting signs out of their Indian business, which is great. But locally, which is where most of the business is, it's in terrific shape. Very good, as Owen Wilson, the CEO, departs the business. Very big increase in the dividend, this is not a dividend stock. but it'll be approaching a sort of on these elevated levels. Really cracking result from REA. The one cloud over the business of late has been CoStar, who are buying Domain, which Nine have sold their controlling stake in. That'll happen in the next 6 months. They're pretty relaxed. Our thesis is that a CoStar-led Domain will still struggle to compete with the embedded nature of REA Group, which is so dominant and entrenched and loved really in the Australian market, which is when you get that level of involvement in the way people activate and use and buy and sell property, they're not going anywhere. So
we've looked at the UK market where CoStar 4 years ago now bought the second largest player in the property in the market, and Rightmove is the realestate.com in the UK. UK agents detest Rightmove from all accounts, and they've got a different setup over there. If I want to sell my house, the agent actually has to pay all marketing fees themselves, and they have to build that into the commission that they charge me. It's not user pays. And they've got a view that Rightmove hasn't been reinvesting significant amounts. They're not getting the leads that they'd hoped to, etc. But 4 years on, Rightmove has actually grown its market share versus the player that CoStar bought during that time. So we've spoken to some fund managers about this as well. There has never been a case in the world where the number one property vertical player has been overtaken by the second. And if anything, the gap widens. So REA will be trading at a higher share price if not for the bit of uncertainty about what CoStar are going to do with Domain. But to me, it's still a buy. A
good bump on the result today, but it's still $20 below its all-time high. Yeah. And again, as that plays out, things got growth, but it's a seriously awesome business. And again, we've been saying that for a long, long time. It has been soft. You've had a bit of an opportunity to buy it of late, so but it is in really, really good shape. So it looks good. Coming up, Ben,
we got sold.
Yeah, that's a big one. So they actually gave their timetable for the merger implementation, which is coming into the September and October period. So
23rd of September. So if you're a Brickworks shareholder on the 23rd, you will then log in the next day and you will have sold Pat shares. The stock has put on $3 or $4 a share in the couple of days since that's announced. So, our sort of view has been you're going to see some ETF buying leading into this. The combined business is going to be a significantly larger part of the index than it is the two separate ones are today. And we think that this is going to come onto more and more radars as a combined house than it is in the cross ownership that it used to have.
Absolutely, seriously, substantial business. Great timing. A catch up we've got next week with Chairman Rob Milner and Todd Barlow, the CEO, which will be a wonderful additional insight into what they're planning as they have this enormous business now as a single entity and with a really, really bright future. So that's good. Well, we're going to be busy in the next few weeks. We'll be back with updates about reporting, and we look forward to bringing you that news very soon.